Hey everybody, it's Henry Steele. Today is Friday, March 29th, 2024. Today is Good Friday, which means this coming up Sunday is Easter. So happy Easter to everybody who celebrates. Now let's go ahead and look at this past Wednesday's market action right here. This Wednesday, March 27th. This is midnight my time, Central Standard Time. Of course, this is the market open right here. And you can see that I already have some levels put on the chart. This is major support from the pre-market data. This is major resistance right here. We did have a major resistance zone right here, but the market came down and then right away came back up and created a higher top, which took the major resistance away from here and put it right here, right before the market opened. This is the 8:25 a.m. candle, so the last 5-minute candle before the market opened. And we are, of course, looking at the micro E-mini S&P 500, the June 2024 contract, and this is the 5-minute chart. Now, there's actually two things I want to talk about in this video because I'm not going to look at the trades that would have happened in this video because there's really two more things I wanted to add to this list of things where we can improve our trading system. I want to talk about these two things, and then I'm actually going to, early next week, Monday or Tuesday, make a video about the rule set that I'm going to change. I'm going to change a few rules around to create Support and Resistance Trading System 1.1. Because the reality of the situation is we're losing a lot of good trades that we could be taking, and we're getting into bad trades that we shouldn't be taking because of two things. The first one here is if you look at this right here, we can see that we had a top, the market moved down, we had a lower top right here, slightly lower close, and definitely the market didn't quite go up these last few points here, so it's a lower top situation. Where as long as the market moves below here, we'd be triggered for a short, and our target would be the major support that's right below it, about 10, 11 points below it. This would have been an absolutely wonderful trade. We would have gotten in it, and like 15 minutes later or less, we would have been out at our target, hardly ever moving at all against us, so that our stop loss wouldn't have even come close to being hit. But we weren't able to get into this trade according to our current rule set because we didn't have pre-market support and resistance that we moved back to with this lower top here. And as a result, our current rule set would not have allowed us to get into this trade. And if we look back over the last couple of weeks of price action, this has happened multiple times where we had a nice, beautiful setup that was pretty obvious just by looking at it, but our rules didn't let us get into the trade because it wasn't happening at pre-market support or resistance. So, should we include the use of support and resistance from more than pre-market data for lower highs or higher lows? So, for instance, if we had just allowed ourselves to look just the day before, we have a resistance zone right here. If we look, we kind of have a head and shoulders pattern right there. And we have a resistance zone right here that's right where we need it to be to allow us to go ahead and get into this trade short. So if we had allowed ourselves to include yesterday, Tuesday's price data, I should say, on Wednesday, we would have allowed ourselves to get into the trade that we otherwise would not have been in. Now the second situation involves the break and retest. See, we had all this move up here. The market was meandering up during pre-market. We had this lower top situation right here. The market moved down significantly. Volatility was much higher right here. And then we get down here to the major support from earlier pre-market. And then we just kind of meander down a little bit. So what happens if we look here, the market broke this level, went down, closed below it, came back up, touched it, came back to this price level, and according to our rule set, we would have gone short at the close of the candle, this one right here that moved back in the direction of the original breakout right here. So had we gone short right here, we would have measured from here all the way to where we went short and doubled that, and that would have been our target, and our stop loss would obviously be up here somewhere. Well, we can clearly see that after we're done meandering only a little bit to the downside, we come back up and we would have been stopped out of that trade. So I have another note for improving the trading system. Should we add a rule to the break and retest type of setup for the signal to be valid that the break and retest needs to be close to a top or bottom? In other words, relative to the volatility that had been going on, the market had been moving down for a significant amount of time when it made this break and retest. So the market's less likely to continue down in the direction of this break right here, this break of this price level, because we've already been moving. But if we had our break and retest up closer to here, then we'd be much more likely to continue in the direction of the breakout. Hopefully that makes sense. So what I'm going to do, instead of looking at and adding these trades from this past Wednesday, I'm just going to early next week, Monday or Tuesday, I'm not sure when I'll be able to do it, but I'm going to record another video where I go over a change in a couple of rules that's going to help us eliminate these two issues here. We're going to create support and resistance trading system 1.1, and then later next week, after Wednesday happens, we'll look at Wednesday's price action in relative to our new rule set. Hopefully that all makes sense, and I'll talk to everybody early next week, and then again later next week. So until then, everybody who celebrates Easter, happy Easter to you, and I'll talk to you next week.